how to legally not pay taxes in the United States. As law-abiding citizens, one of our major responsibilities is to pay our taxes, regardless of whether you're a company employed, self-employed, or a business owner. You are required to take your part as a taxpayer. This helps the economic growth of the country, which in return provides more opportunities to its people. Although we know that paying taxes can help us in our economy, this major task can be very demanding and can cause a lot of problems on a financial level. We must know how to manage them properly. In this video, we'll talk about different legal ways to lessen the burden of paying your taxes based on our current laws. So sit back and get your pen and paper ready. But before we continue with the rest of this video, please remember to click the subscribe and thumbs up buttons as well as the bell notification icon. This way, you'll be the first to know whenever we release new exciting videos. Also, we'd love to hear from you, so please leave a comment in the comment section below. Make sure you watch the entire video as we will mention a free way for you to win a $20 Amazon gift card. Okay, now let's continue with our video. Health Savings Account. One good way to save on taxes is by opening a health savings account. Why? For starters, contributions made in this type of account are automatically eligible for a tax deduction. You can also withdraw from this account and use it for qualified medical expenses. Another benefit of having a health savings account is that you can get to carry over the remaining balance to the succeeding years. In the long run, you'd realize how much you saved from paying taxes. Military member deductions. Being part of U.S. Armed Forces can also grant you a lot of financial advantages. If you're an active member or a reservist of the Army, Navy, Coast Guard, Marine, or Air Force, you are entitled to a few special tax deductions. These tax deductions are from non-taxable earnings, also called allowances or assistance. This includes living allowances, clothing allowances, and temporary lodging. Members of the military are also entitled to have non-taxable educational, legal, and medical assistance. Prepare a retirement account. No one considers working forever. At some point, we want to be able to enjoy life without having to think about our financial responsibilities. The best way to go about this is by setting up your retirement account. Not only does it help you prepare for your future, but it's also another way to reduce taxable income. Contributions made to this type of account grow free from tax until such a time that you use it for retirement. Ask your employer about flexible spending accounts. If you work for a company that provides healthcare coverage, you should ask your employer if they can provide a flexible spending account. With this type of arrangement, you have the option to devote a certain percentage of your monthly earnings to the account and use it for qualified medical services and expenses. Funds that are withdrawn from this type of savings account are also tax-free. Flexible spending accounts can usually cover both the principal account holder and their eligible dependents, spouse, parents, children. Under normal circumstances, the remaining balance from these accounts cannot be carried over, unless the employer is willing to give a grace period of 2 to 3 months. Donate stocks to charity. Instead of selling your stocks, which will lead to having capital gains tax, you can consider donating them to your chosen charity. It can help you in 2 ways. First, you get to assist a cause that you care about. And second, you can remove these donations from your taxable income once you file your taxes. Set your house for lease. Speaking of using your house to reduce your taxes, you can also rent it out for company and business meetings. Rental income generated from this type of setup is automatically tax-free. How does it work? According to IRS Augusta exemption, homeowners are qualified to lease their houses for business purposes for 14 days per year without declaring the income acquired from it. Note that you should not be using your home as your permanent home office to be qualified for this rule. Review eligible state and local tax deductions. Different states follow different local tax rules and regulations, so you have to understand how it works depending on where you are residing. For example, some tax rules that are available in certain areas can be waived or exempted in other locations. Knowing what deductions are available for you can help reduce your monthly taxes. Itemize your state sales taxes. If you live in a state that does not have income taxes, another option is to increase deductions from your tax would be itemizing your state sales taxes. You must declare all sales taxes, including major purchases such as properties and cars. Based on the current law, the maximum amount of deductions that can be acquired from sales taxes is $10,000. Adjust your assets cost basis. Capital gain tax, as we know, is the amount of tax assigned to the earnings that you get when you sell assets, including properties and real estate. One smart move to lower down capital gain tax is by making sure that you include all reinstated dividends when computing the cost basis. According to IRS, if you sold your house, you get to keep the first $250,000 if you're single, or $500,000 if you're married. As for higher education credits, a parent's dream is to be able to get her children through college, which we all know can be very costly. It's a good thing that government has ways to reduce these costs through several college tax breaks. In a nutshell, a student can be eligible for up to $2,500 worth of credits on a 4-year course in any college or university. For someone to be eligible for the full credit, the household income has to be within a specific range, and the student to avail of it should be enrolled in a recognized degree or the like. Do your business while on vacation. Why separate business from leisure if you can do both? Aside from being able to work and enjoy your vacation at the same time, doing so can also save you a lot. With proper calculation and help you from a registered tax professional, you'll be able to reduce costs by removing the expenses used for the trip, such as airfare and accommodations. Check your eligibility for Earned Income Tax Credit. Another practical and legal way to reduce your taxes is to check you qualify for Earned Income Tax Credit. The IRS describes Earned Income Tax Credit, or EITC, as a way to help low to moderate income workers, essentially to allow a taxpayer to get a portion of his money back if the accumulated tax for the year is more than what is expected from him. Like the higher education credit, you must meet certain requirements to be eligible for the EITC. The credit depends on the family size and household income. Consider home office deductions. Another good way to legally reduce your taxes is to understand how home office deductions work. Using a part of your home for business can make you eligible for tax deduction if you meet the requirements set forth by the Internal Revenue Service, or IRS. Renting a house, not a problem. This type of claim is available for homeowners and renters. Use your subsidiaries to get deductions. Nowadays, having a job can sometimes be insufficient to support our daily needs and wants. Because of this, people resort to having one or more side hustles. From putting up an online business to accepting freelance jobs from clients to anything that can help get more income. Aside from extra funds, you can also save a lot from this supplementary income. Some deductions that you can get from your side hustles include, but are not limited to, vehicle or mileage expenses, business meals and travel costs, subscriptions and memberships, and advertising costs. Get 50% off of your self-employed taxes. Aside from the extra funds, there are other benefits that you can take advantage of if you choose self-employment. If you're employed by a company, the default setup is that the employer split the amount with you. If you are self-employed, you'll be responsible for paying your monthly taxes in full. For the government to make amends with the excess tax, they will let you deduct 50% from your income-generated taxes. And finally, for the conclusion of today's topic, financial stability is the goal of every single taxpayer. It's not enough that we work smart. We should also learn different legal techniques to get the most out of the taxes that we pay. Regardless of your location, it's always best to keep in touch with the tax authorities to see what tax breaks apply to you. We hope you enjoyed this video. Again, don't forget to subscribe, like, click the notification bell, and leave us a comment below. We love to hear from you, and we'll be doing a random name drawing of the first unique 100 commenters who also liked the video and subscribed to the channel. The lucky winner will get a $20 Amazon gift card. So get involved and don't be shy.